Is the economy at risk of overheating? I'm sure by now everybody's had time to digest the recent U.S CPI inflation figures. We are at 40-year record highs, some of the highest inflation that we've seen in recent memory, and there's a lot of questions currently abounding. We know that there's some uncertain narratives playing out on markets, whether it's the European situation, the supply chain bottlenecks. We know we've got a strong labour market, the economic recovery has been resilient, but the question is, what happens from here? Today we're going to discuss these questions. We'll start by unpacking the inflation print itself. We'll talk about the market reaction, which was quite interesting. And then at the end, make sure you stay for that, because we've compiled 5 key questions that we think will be most important as we think about the broader macroeconomic recovery and discuss where the markets may head from here moving forward. Let us know your thoughts on the video, drop in a comment below, park up with a cup of tea or coffee, and welcome to the show. And so it makes sense for us to start amongst the data. Of course, we've just had the U.S CPI inflation print, but it's important to understand the backdrop as well for it, that we're just off the back of the first Federal Reserve rate hike of the cycle. In March, it was for 25 basis points, and now we've had this inflation print. We see US headline CPI figure at 8.5%, slightly ahead of consensus estimates, 1.2% month on month. And then we had the core inflation number. Of course, this is one of the Federal Reserve's preferred measures of inflation. It strips out some of those more volatile components like food and energy costs, and it advanced by 6.5%. Now, this was actually slightly lighter than consensus estimates, only 0.3% month on month. And this attracted a lot of analysts and economists' attention to this. Now, if you're thinking about what were some of those key drivers that really catalyzed inflation over this past period, it's not going to be surprising. It was fuel, it was food, it was housing. Fuel alone rose by over 18% in this past period, which of course is a significant uplift, but it makes sense when we consider the backdrop and everything else that's played out over this past period. On the other side of the coin, you might be interested to reflect on the fact that used cars and trucks actually retraced in terms of their numbers. It was down by 3.8% over this past period. And it wasn't long ago, just 12 months ago, when we saw that used cars and trucks were some of these key drivers for inflation, which of course leads us on to the question, are we near peak inflation? It's worth noting that there's a lot of economists and analysts really tossing up these questions, and there's significantly divergent opinions. We have to think about the fact that base effects are going to start to cycle through. It was about 12 months ago in April when the used car and truck inflation started to flow through and proliferate into those prints. And so the question is, are we at peak inflation? Is the rate of growth going to slow from here? And I'd be very keen to know your thoughts on it all. And so with that backdrop and understanding, I wonder if you can guess how the market reacted. The hottest inflation print in over 40 years, record highs for inflation. You might be assuming that maybe we saw a bit of a sell-off on the markets, but actually the instant reaction was yields went down, markets went up, stocks were green, and interesting across the equities, it was actually the more growthy end of the market, the risk on, with the Nasdaq leading the way up by 1%. Of course, it's a fascinating time. We did see the market actually pair gains into the close in the US session. A lot of this has been attributed to the fact that the oil price is back in and around that $100 a barrel mark, of course, stoking inflation fears. But it now leads us to a fascinating discussion of, has the market been too hawkish? We know there's been rate rise after rate rise, continue to be priced in. But this instant reaction was quite a fascinating one to reflect on. Of course, nobody knows the answers. We'll have to look towards the future and this situation continuing to evolve to get a bit of an insight. But when we think about it now, we know that one of the underlying questions and one of those key factors to consider is, how is the strength of the recovery? Leading into this past period, it was strong. Strong household balance sheets, the consumers have been resilient, but of course over the past 3 months, the start to 2022, there's been a range of macroeconomic environments that have affected some of the certainty surround that we had in 2021. And so that leads us on to, what are some of the market fears? We know there's still uncertainties. I think first and foremost, it's not going to surprise anyone, but it's about the rate, the velocity, and the trajectory of the interest rate hike cycle. As we know, this rate hike cycle commenced in March, 25 basis points. But now we're starting to see the market pricing in potentially 50 basis points at the upcoming May meeting. This is the upcoming FOMC meeting. It's going to be a fascinating discussion because we're getting more and more insight from some of the Federal Reserve members about the fact that 50 basis points was considered. However, of course, with the Ukrainian situation, it was thought to do 25 basis points and to see how it evolves from here. And then flowing onto that as well is the unwinding of the balance sheet. We've started to get some insights about quantitative tightening. Lael Brainard provided some insights about the pathway up ahead. Of course, we know the Fed's expanded to significant $9 trillion-ish balance sheet. Looks like they'll be paring back $95 billion per month and then waiting to see where to head from here. And probably the third fear, or the question that is really fascinating to consider, is demand destruction. Of course, economics 101, as prices continue to rise, eventually demand is going to come down. But we've seen consumers be resilient thus far. And so far, companies seem to have some relative pricing power, and a lot of them have been able to pass on these rising input costs without significant destruction of demand. But the question is, with inflation at such high levels, how far can this continue on, and when do we start to seeing significant demand destruction flowing through the economy? And so with that understanding, that leads us on to the 5 key questions that I think will be important for investors, analysts, and economists to continue to ponder moving forward. Of course, many of these are at the macroeconomic level, but there's a lot that will continue to evolve that's going to be fascinating. I think first and foremost, we've talked about it, but how strong is the consumer? How will demand be matched? But we also know we've got an upcoming earnings season, which is about to commence. So that will give us a bit of an insight into how companies have been able to pass on these rising input costs. Then secondly, is this peak inflation? We've talked about the base effect starting to cycle through, but is this peak inflation? And then question 3 is, how will we see inflation start to ease? How rapidly will it be? A lot of forecasters and economists had the second half of 2022 where we'd see the supply chain bottlenecks and uncertainties start to naturally subside. So it'll be fascinating to see if that does happen. As you know, that transitory line has been abandoned by the Federal Reserve. Inflation is definitely more persistent than was initially given credit for. So this is a key question. On the fourth side, where is this neutral rate? There's been discussions of it being in and around that 2 to 2.5% mark. But where is that neutral rate? And at what speed will the Federal Reserve be trying to get us there? Because of course we know that flows through to the 5th question, and ultimately the one that everybody's watching, waiting to see how it will be answered, is, can the Federal Reserve and the other central banks around the world stick the soft landing? Now, at its core, the soft landing essentially means, will they be able to cool inflation without sending the economy into recession? If you're interested about what the soft landing actually is, we'll leave a link up above where we dove into this concept a lot deeper. But of course, we know that Federal Reserve as well as other central banks have really lifted inflation as that key mandate. It's their focus, and it's what they're going to be targeting over this upcoming period. So we'll watch and wait to see how inflation eases, whether this is a peak inflation period or if there's more to come. I'd love to know your thoughts on it all. Drop in a comment below. It's an interesting time. If you've enjoyed the video, like, subscribe, turn your bell notifications on. You won't miss any of our daily episodes. And we'll leave a link to another video that you can check out after this one, unpacking some more interesting macroeconomic concepts. Thanks for joining us. For now, stay well and happy investing.